The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tommy O'Brien, and Darrell Martin.
Hi, folks. Basil Chapman sitting in for all three. Can you imagine what a challenge that is, sitting for Tommy? And can you believe for the person that really created the Bull Bear Binary Option Hour, Darrell? I mean, this is really tough stuff. Anyway, let's go. We've got the 10-minute E-mini chart that we're looking at right now with the Chapman wave notation. What we've done is we've gone from the low of 20 past 4 this morning to 1, 2, 3, 4, 5, 6 higher peaks. That is a peak F-top. And usually at a peak F-top, that's where you could get the deepest correction and the longest correction. We've already seen that it's gone from 2187.50 to a low of 2182.75. So it's about 5 points. Now there's some kind of a consolidation. What I like to do is I like to then go to the, I'm going to grab this right here. What I do is I go to the 1 minute chart. I'm not able, because I was so busy this morning, and then I also did the filler in at 10 o'clock. I didn't do any trading, so I didn't do any notations. But let me show you something here in the cash index. This is the cash index, wrong one. That's 30 minutes, don't need that. Oh, I'm charted out here. Just got too many things going on. Okay, there it is. So now what we've got is, this is the cash index. So when I do my notations, I always like to look at the Ds. Four higher peaks. I'll show you this very quickly in a moment. What we essentially look at is, within the Chapman wave methodology, you try to identify the lowest low bar and then merely count each successively higher peak, and you label them peak A, B, C, D alphabetically. And when you get to D, other things can happen. It can go to an E, F, and a G. It can never go higher than a G, or it could recycle to a brand new buy mode. So I just wanted to show you that. That's the simplistic. This is the, let's call it the schematic of the Chapman wave methodology, something I'll be teaching in a 3-course series of webinars starting in December. But now let's look at the S&P cash. So you've got your peak D, and this is so fascinating to me because the futures trade all day, but the S&P cash only trades during market hours, 9:30 in the morning till 4 o'clock in the afternoon. And yet, even though the principle involved is exactly the same, you would think that there'd be a completely different correlation. But look at this. I haven't even checked this out. I'm just doing this for the very first time here. Let me show you something. I always need to double check 13, and that's it. Okay. So now we've got a peak A, and it's pulled back very sharply. And then you've got a series of peaks underneath. And this is the cash. If you're looking at this, this is the 5-minute S&P cash index. And if you're listening, what we've got is a very sharp move that came from a low at 15:55, 5 minutes to 4, just before the bell. And it was at 2174.77 on the 16th, and it zooms up, stops dead at 2184.02, and then pulls back. Now we've got another series of peaks, and because they are below that big one that went to an A, this can be called a gray B, and then it starts fresh, overlapping, and it goes to a C. And what do we always look for? We look for a D. Boom, there it is, a D. And what happens at this particular D? Pulls back very sharply. It goes to trough A. On the way down, we call them troughs, and we label them with a lowercase a, trough B, trough C, trough D. Well, all of a sudden, what have you got? You've got a D at the bottom. You got a pattern that looks like it's got a little arch formation, a successful test of the pattern that I call the dreaded H. That's that H there. And I'll just draw it in because this is very important. Patterns repeat over and over and over. This is live, so it's much nicer to be doing something live. Now look what happens. Right there, we get a successful test because it did not take out the low of at 1435. That's 235 this morning. It didn't take out the low of 2183.35 when it came down to 21 83.59. So I put in an up arrow, and I'm expecting to count at least 4 peaks. And lo and behold, we get A, and this is the 5-minute chart, B, C, D. Remember, the 10-minute chart did an F. So it's a different labeling, but it has the kernel. It has that germinal theme. You know, when you listen to Wagner, when you listen to Beethoven, da 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 da, and then that theme keeps coming back and back and over and over and over. It's called the germinal theme, not German, but germinal, like in germination. And that kernel is like a fractal that repeats over and over. Look what we've also got within the Chapman wave, the methodology. We've got these patterns that I call either the cup or the V-shaped pattern. And you've got an arch. There's that little arch with the H pattern. So patterns repeat. Lo and behold, I can put a down arrow there because it's a very sharp pullback from a peak D. So I just wanted to go through that just to show you the labeling. And then what I'm going to do is since I'm not going to be doing any of the binary right now, I just thought I'd show you some of the techniques that I'm going to be discussing in great detail in this series of webinars that I'm giving. Let me see if I can go to the front page of TFNN. Right here, it'll say, there it is. Simple technical tools to analyze charts, a 3-part course on the Chapman wave. And that starts on, December the 6th, Tuesday, 6 to 7:30, December the 20th, 6 to 7:30, and January the 10th, 6 to 7:30. Basil Chapman, I'll be right back, sitting in for the triumvirate, and I'll be right back straight up these messages. Dow's down update, and then we'll go through the markets and give you the as they are trading right now.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I was showing you the 10 minutes on the E-mini, the December E-mini, and then the 5 minutes on the cash S&P. Well, look, I'm just going to show you this. This is crude oil, and we trade crude oil right now at 46.10, up 12 cents. Let's find the most obvious low bar. It's right there, right? So now we're going to go, we're looking for at least a D. It can go a little higher, but we're looking for a D. So it goes peak A, this is the 10-minute chart, B, C, D, and that makes the sharpest pullback, but then there's a sudden spiral to the upside. I always call that's like a rogue wave. The sign said high tide at noon, and at 12 or 6 it was that one wave that didn't see the sign and splashed. Everyone gets wet before the tide goes out. But in fact, the tide had already been going out. It was just that one wave that didn't read the sign, and that's that peak E. Well, what happens, it keeps coming down. It goes trough A, trough B, trough C, trough D, E, and starts again, trough A, B, C, and D, and then it goes to an E. And now what we've got is a brand new start, and you go to, let's see if it's 4 or 5 peaks to the upside. You go peak A, peak B, peak C, peak D, and a little squeak to an E right there, and an attempt at a double top, and plop, it comes down, and that should be impacting the market right now, so that also, you've got your crude oil doing the same sort of thing. Now let's go back to the E-mini and see if that peak F, which I said was often where you get the deepest correction. Let's see. There it is, deepest correction from a peak F in the 10-minute E-mini right there. Now let's look at the cash index. That was peak D, and we're going to see what happens here. And there it is, peak D. I'd already put the down arrow, and there's that pattern. You remember that H pattern? Repeats over and over and over. Wait a minute, didn't it just do that? There's the H pattern right here. These are the techniques that I'm going to be teaching and going over in the webinar that I'm going to be giving in December, going into January. 3 webinar series. I'm not sure what I should call it. 3 webinar series, that's what it is. And it's on the basics. It is, yes, it's nice to know the Chapman wave methodology. Look how easy it is, peak A, B, C, D. But that sometimes can get a little difficult. Is that an E or an A? And that's the question sometimes. But look, if you can just trade this for your Ds all the time, you can do very, very well. Now what's happening is we've broken support in the 5-minute chart, and it's pulling back. Let me give you the numbers now. The TLT is up 38 cents at 121.58. Not a very positive pattern because the MACD is just too deep, this correction, and the stochastic's down at 10%. So yesterday should have been a continuation of the rally, and today should see 128, 123.53. Days younger, could still happen. But there's a little mini H pattern. It has to be successful, and this bar right here cannot go sideways. It needs to be, by the end of the day, it needs to be up at 121.90 to 122.20. And that'll say, okay, a little H2 and M pattern. Now we might be able to break to the upside. But look at the weekly chart of bonds, of the TLT. This is really very weak. Look at that ugly candle from last week. And we followed through to the downside. You usually like to see an inside bar. I mean, when you continue down in this kind of pattern, I'm just trying to think, I know that pattern. Where did I see it? I think, let me just double check. I think that's, yeah, there it is. So here's a stock, Edwards Life Sciences. EW. Look at this bar. It made a peak E at 121.75, and that candle, that weekly candle that just smashed to the downside, should have had an inside bar. It didn't, and as a subsequent result, you've got continuous, not very big, but there are still down moves, lower lows and lower highs, and that's a negative. So now let me go back, and I want to just do the indices. What are we trading at? The Dow's down 7. I think there will be a leg C just above 18,934. And then we're going to see, do we get that D? Because the MACD, the moving average convergence divergence, is really strong. And the stochastic at 95, I love that. I mean, that is buying pressure. So regardless of what the news was to create this 4 huge candles to the upside, that's not the issue. The issue is the sustainability. And the weekly chart is just bumping into that resistance, but it is turned up not great technicals. The monthly actually has beautiful technicals, and that's looking very good. So Dow at 18,902. I think next week we're going to the high 18,900s, and 18,800 should be support. S&P right now, SPX.X, we've got a down 121 at 2185. It made a leg B. Probably going to be making a peak B here. It needs to get to 2193.82 to start leg C in the monthly. I think it will do that, and probably next week. So as we're looking at this, what I'm looking at is that it's the weekly chart that's getting both the Dow and the S&P. In fact, all the weekly charts except for the NDX 100 are. I'd even include the NDX 100. Next week is going to be a very important week to see the sustainability. Is there a sharp turnaround? Does the S&P test the 9-period moving average of 2168? That's 20 points down, 200 points down in the Dow. I think not yet, not just yet. So, okay, so that's the S&P parameters, 2172. A break under that says, okay, you can go down a little deeper. And anything above 21, what's the high today? 2189. Anything above 2190 is extremely positive. Let's go to the QQQ series. Not great action. Yeah, it's struggling because of Amazon and some of the others that they had fantastic moves, and now they're consolidating. The Qs are actually the laggards. They were the leaders, and now the laggards. The monthly chart is still terrific, and the weekly chart is actually looking good. I'm really looking at the daily and saying it's struggling somewhat. So 116.80 would be support, and 118.50 would be very good action. Now let's go to, I'd like to go to gold. Gold right now is down 7 at 1209. This is just not great action. I don't see anything in gold. Why? Because I've been favoring for months the dollar, and the dollar it made a new recovery high. I'm not going to say an all-time high because that's way up in the 121 area, and it's at 101. And I'll show you something very interesting. I'm opening up this monthly chart, squeezing it. There was that high at round number 121 in July of 2001. It gets smoothed out, but I've still got it at 121. It is an index, went down to 70.70, bounced, went to 72.70, a little higher high. There's the lowercase h that goes to an M pattern, and then whoom, it started to move up, and now it is testing all the resistance points from way back in 2000, 2003, and 2004. So this is very, very important. Besides the pattern that I drew in a long time ago, the double U pattern, two cups next to one another like that, and it's breaking out. And if the dollar in November can close nicely above 100.51, really I would say above 102.50, that's going to mean a lot. It's going to suggest that the dollar can go even higher. Otherwise, it'll start putting back into this bar right here, into the bar of October with a high of 99 and a low of 95. So that's the dollar. And now we want to look at the TLT. The TLT is up 33 cents at 121.53. Really struggling. Didn't I just do that TLT? I think I did. And all I'm saying is that yields, let me just show you something with the yields TYX.X. And I was asked about the IWM. I'm going to go there next. TYX is kind of struggling here, but it's still having a high-level consolidation above the 200-period moving average. I'll be back straight off this. This is Basil Chapman. I usually do the hour afters, which I'll do today as well, which is the Tiger Technicians Hour, and my service is the opening call. I'll be right back. Dow's down 12, S&P's down 1. Be right back after this important message.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Basil Chapman sitting in for Tommy, and Darrell. So this is what I'm looking at. The TYX, which is the 30-year T-note yield, had a spiral to the upside. Normally, the spiral would create some kind of, at best, it would create some kind of a flag, a little higher, but mostly a little bit lower. And I'd put in a rectangle like that, saying 2.96%, right? No, call it 28.86. It could go maybe to 20. I think it could go to 30 even. It could go right. Yeah, it could go to a 30.80, maybe even touch 30.90. But mostly, it's probably going to digest these gains, and it could test the 29 to the 28.60 area. And I'm putting this rectangle in. We'll see what happens. If you look at the monthly chart, I love drawing these things. The trend lines, and I'm going to be showing how to draw trend lines in my webinar. I love to do this because what we've got here, and I drew this ages ago, this is a monster, multi-decade down channel in the 30-year yield. But what's important about this is we're getting, every time we've got into this area that I call the Chapman Wave inside track within, it doesn't have to be within a channel. I love it when it's in a channel. It doesn't have to be. But this inside track suggests that this is the area where it starts to be repelled and yields come down. Well, this candle, it relates to that candle right there, and you can see it's inside the inside track, Chapman Wave inside track repellent zone, and below is the propellant zone, and this is the area where it should start to bump into resistance. So I think yields have basically done what they're going to do, but that doesn't mean to say that they can't hold in this area with little spikes to the upside, but also a little bit more downside, but really stuck within this range. And the 9-period moving average of 25.88 might not be hit for a while. So this is going to be very important to watch. And at this particular point, it's suggesting that yields have done what the Fed would like it to do, and they've already spiked higher. So we're going to be watching this closely. But on very short term, 28.84 is the 9-period moving average support. And if it just takes out 30.30, I don't think this can be called a leg G. I'm going to call it more likely a leg C. That'll be a B, and that'll be a C, and it'll go a little bit higher. So I'm watching this closely, but more importantly, I'm just going to draw this in because that's how rectangle formations are formed. All right. Now, let's go on. A question about the IWM. I didn't do that. I don't believe no, I didn't. IWM spectacular weekly. I could call that an A, an F/A, and I really should because I like to be as thorough as I can so that subscribers and others who are using the Chapman methodology know exactly what I'm thinking. F says, whoa, yellow light, be very careful. Because after you saw what happened with that peak F, look at this, in the 10-minute chart, look at this. There's that F. Now we're going even deeper to the downside. So F, and you saw EW, Edwards Scientific, what happened to that peak F. Now look at this. It's either an F or an A. A is really positive because it could still go to B, C, and D. My thinking right now is that it could very well be an A, but I'm not going to do anything. We don't have this at this particular time. I actually would like to buy it because I think on a short-term basis, it should still go to a C and a D. Now, that would just be a trade, but if it's bought correctly now, this would not be correctly. Correctly would it be in the 125s rather than at 130.48 up 19 cents at a, look at this. This is the IWM. That is a monthly chart, and it's gone from the 30 area, 31 area to this high. And that's a V-shaped pattern, and that V-shaped pattern can be very powerful if it breaks to the upside. So now let's do something else that's very important. I'm just going to use parameters. And at this point, I would say the 130.90 to 131.37, somewhere around there, could be the resistance. If, look, 130.83 was the high yesterday. 130.83 is the high today. So this is still leg B until it makes a fractional peak. In other words, today, if it was a penny lower than yesterday, I'd say possible peak. But at this point, all I can say is that this is something to watch because it's holding very well, but it's still leg B, and it should go to C and D. It's the weekly that's the question, but look at this. I really feel strong that I must call this leg B in the monthly. And that says whatever pullback we get, there should still be higher highs, leg C and leg D, coming in 2017. I hope that covers questions that I had from earlier. And could I look at TWLO, Twilio, which is something that I had. I thought we wanted to buy it, but I pulled the buy signal. We've been in this before, but I think so. S&P in the den. If you're in Twilio already, I'm going to say make a stop on at least part of your position on that 9-period moving average of, and if I can just click this, of 36.80. It can't be 36. It has to be right there. There you are. So make a stop on some of the position, 34.53. Yeah, 34.53. I'd take something off, and I'll tell you what. I like the pattern very much. But today was very important. If today it went to leg D, leg C above 37.84, it's trading at 35.41, up 21 cents right now. Cloud Communications, Twilio Inc. A shares. I would have been really impressed. And then I would have said, you know what, even though it's going to go to a D, the next pullback I want, because this thing wants to go to the 9-period moving average in the weekly of $41. But more importantly, what I'm thinking here is that the stochastic had a fabulous move to the upside. The MACD's been strong, and this hasn't had a move that took it to the 39 area, which is the 200-period moving average. So I think it's going to stall. So all I can say is put a stop in, and if you want to add to the position, I'd add 1 penny above the high of 37.84 made on the 16th, and I'd add that, and I'd use that as a trading position. Try to keep what you have now as a core. Now, the question is, would I buy it or would I sell it? At this point, I wouldn't sell it. Would I buy it? I really have to wait for the day, and I might buy it on Monday if certain things happen. In fact, if it closes at 35.63 or higher, then I think that's excellent action. It's worth at least having a small position. So I hope I'm clear about that. A short? No, not yet. Later on, there might be a short in this, but at this particular point, it looks like it wants to have another move to the upside, but it all depends for me on the action today. If it closes down here at the 35.40, 35.30 area, I don't really want anything to do with it. And right now, I need even another day to see. I'd rather buy strength and weakness on this stock. Okay. Next question was, Basil, can you look at platinum? At PL, I hope that's platinum. Platinum continuous contract. You see, there's a peak D, and we've come back and we've gone below, not we, platinum continuous contract has gone below. Gosh, I need to show that chart. I show it every day lately. Yeah, let me make this very clear. I don't see platinum as doing anything right now, and that probably is also hinting at what's going on in the automobiles. They're not acting very well. I think they do use some platinum, but that's not the main thing. But if I'm looking at look at the peak Ds and Es. There's just too many. Look at that peak D, major top in platinum. Oh, we've got a break coming in. That was quick. I'll talk about platinum when we get back, and I'll talk about these peak Ds that have been made and this peak B that might be a failure pattern in the monthly chart. No, I would not be touching this on the long side, and short is difficult. I'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. Basil Chapman sitting in for Tom, Tommy, and Darrell in the Bull Bear Binary Option Hour, brought to you by Nadex. And we've been looking at short term, looking at intermediate term, whatever it is, based on some of the Chapman wave methodology. And I'm showing you a pattern here. This is the arch formation. It goes straight up and it comes straight down. And look at this. There's a left side, right side price time match. And I call this the plumb line, that middle line right there. And people always say, oh, markets come down quicker than they go up. No, only in bear phases. And a bear phase could be a 1 minute chart, it could be a monthly, it doesn't matter. A bear phase has that acceleration that comes down. But most of the time, prices go up and then they come down, and they have the same modus operandi of human nature, going to the upside and the downside. Only on the downside, when things get scary, is there an acceleration, and sometimes scary on the upside is an acceleration. Why do I show this? Because I was asked a question about a good statement here. Where did it go? Mr. Bull says platinum went very quickly to peak D in the last rally. Bearish follow through, right, Basil? The question. So here is the platinum chart to the upside, and it goes very quickly to ABCD. And we're seeing that in some of the charts right now. That's why I'm suggesting that we're getting closer and closer to some kind of a pullback, but I still expect slightly higher highs to at least a C and a D in both the Dow and the S&P, and then we'll get a sharper pullback. Now, what is this uppercase A? Well, this uppercase represents what I call the Eiffel Tower. It goes straight up and straight down, and it comes back down in the same time frame, but sometimes the fulcrum, the midpoint, the plumb line can be moved. And you'll see that here. If I did that exactly to the left side and went to peak D right there, we would have broken that peak D very quickly. And when you do that to the right side in a quicker number of bars than on the way up, that's suggesting that the moment, especially if you close sharply below the left side low, which in this case in platinum in the continuous contract is 927.20. We're trading at 917.90. This is a leg D in the weekly chart. And that A that I drew over there is applicable here. In fact, it's more applicable here because you've got time to the this is also a visual. I love it when it's mathematical, when it's a scientifically proven thing where you've got absolutely, you can see the fulcrum looks like it could absolutely give you a left side, right side price time match. And let me draw a fulcrum from the weekly chart right here, right there. And that would say that I don't usually go to the low straight away. Usually I'd go to the left side low, but we're already past E. So I'm just going to say, look, if this is going to continue in the form that we're looking at, then platinum could keep coming down. If it's going to go down to the low of 2016 in a left side, right side price time match, now I'm going to move this to the right. I need to put more bars in there. So space to the right. Let's go 18 just for now. And then we'll do this. And I'm just going to do this because I would normally not go that far out because that goes to 2017. Yeah, February of 2017 to hit the low of 818.50 that was made in January, the week of the 22nd. So I'm just going to say no. I think, in fact, I would rather look at higher levels of support. I can put this in, but it's not what I'd be looking at. In other words, when people look at a one-to-one relationship and they're looking at, say, the lightning bolt, and they say A to B equals C to D, there's no guarantee that if you've got 20 points to the downside and you've rallied 5, you're going to do 20 points to the downside for that C to D. There's just no guarantee. And you can't even get there, waving my arms, nearly knocked over water. You can't get there unless you take out significant troughs on the left. Well, the significant trough on the left is 918.10. 918.10 made on the week of the 26th of February in the platinum contract. Wait a minute, we are a point under that. So now I can say, okay, if you do close under that, that makes it an active thing. And then what I do is I grab the left side peak of importance. I'm going to be teaching all these techniques. Simple. Do you need to know the Chapman wave? No, you need to know the methodology. Look, you go like that and you go like that and you say, okay, this is my line of support. And every time it gets there, it should try to bounce off it. And that's the line of support. Right here is where platinum needs to bounce. If it doesn't do that within the next week, it's a real problem. But if it bounces, the next time it comes down, that's the level of support. That's a great way to look at it. And here I've got the up. This is not an arch formation. This is the inverted V, and that would be the pattern I'd be looking at. How would this break the pattern? If within 2 weeks, platinum is trading above 975. Make it as easy as that. Why do I say 975? That's the 9-period exponential moving average. Breaks above that, then I can look at the peak of the 11th of the week of the 11th of November of 1023. Okay, so I wanted to do that to show to you. I had a question, and this just shows me the types of things that I'm going to be discussing in great detail in my 3-series webinar coming up starting on December the 6th, Tuesday. Have a look on the front page of TFNN. Now, if you have a chance and you're in Las Vegas, go visit our three folks from the Bull Bear Binary, Tom, Tommy, and Darrell. I believe they're at the Traders Expo. Wouldn't be surprised if John Logan's there. Go visit them. Say hi. Say, I heard your show today. Why weren't you there? We missed you. So, okay. So now we're looking at, that was one particular technique. Now there should be some in time at about 10 minutes to 11, somewhere between now and 5 minutes past 11. This is where you should start to see some form of support coming to the market. So you've had this deepest decline. I put that down arrow. Remember, way when we were over there, I already put the down arrow in. And that says, in this area, is there going to be a left? Could I put the arch formation like this? Yeah, sure can. Would I use the plumb line of F? Absolutely not. I'd probably want to use, I'd use a particular candle. I have a specific candle that I teach how to use, which candle to use if it doesn't look like you can do an exact midpoint. So I'm going to do this right now. I'm going to actually move it just a tad to the right. And I'm going to say, if there's a failure, instead of this 10, 15 minutes where you should find some kind of strength, then the failure is going to suggest to me we give back all these gains, and we're looking at a test of the low that was made this morning at 20 past 4 of 2177.50 if this support right here gets taken out. And what would I do for a left side, right side price time match? I've got the midpoint right there, and I would then choose that D right there as my Chapman Wave inside wedge target line. All right, so we'll see. Is it going to bounce above and treat this as support? Well, we'll know very shortly. But this is the time. This is time. It has nothing to do with the price patterns that we're looking at. Now, I had another question. Where did it go? Appreciate your opinion with your okay. IW. Oh, dollar. I said I'd talk a little bit more about the dollar. Look, the dollar is trading up 32 at 101.21. The strength of this candle going to leg E and doing it so quickly says there is a chance that I could put this in and call it a Chapman Wave instant restart. That's another technique that I use. That would make this E/8. That would be incredible. But we won't do it yet. We need to see the close today, do some analysis over the weekend, talk about it early next week. I'll be back straight after this for the final segment. Basil Chapman sitting here for Tom, Tommy, and Darrell.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Darrell Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Hi folks, we're back. So what we're looking at in this final segment is, look, this is the VIX index, the 10-minute VIX index. It goes from a low at around about 2 o'clock on the 15th. It goes peak ABC. It kind of hangs around and then it breaks out and it goes DE. But it doesn't stop there. It continues to an F and a G. That rogue wave G is really important in my work. I've spent in my CD introducing the Chapman Wave methodology. Let me find it. Oh, I won't waste time. But there's a whole section on the rogue wave. I think it was 11A slide 268. Let me just double check. Yeah, 268. Type in 268 and see what happens. Yeah, there's the rogue wave. And that's something that is very important. And it often happens at a G. Yeah, in the example I give, Triple M, it gives a G. And now what's important about it is that that doesn't have any technical veracity, so it tends to fail. And that G, that seventh, that eight, really, the seventh wave in the Chapman Wave methodology, pulls back sharply and goes all the way back down. There's a little miniature ABCD, pulls back, and now we've got ABC, D, it goes to an E, pull back. This is a gray A. Why is it a gray A? Because it is underneath the previous highs. And to confirm that it's really going to go from a buy signal to a buy mode, meaning it can go to a D, you really have to have just a modest pullback, and then you need to see a move that's probably going to take it towards this high right here of 1352. This is a 10-minute chart, remember, and that's going to be very important. It's trading at 1340 right now. And as I said, this is the time that I would expect that this is where you get the evidence of what's going to happen towards the lunchtime period. And now we've broken that key support, and that's at 2178. So 2177 is going to be very, very important. Dow's down 36, S&P's down now 6. And within this context, what we're looking at is that I was showing you the dollar. The dollar has tremendous strength, but if I go to the 120-minute chart, I don't think I've updated it today. It made a peak D, pull back, and now it's gone to. Is this the pattern that I call the double camel hump? Don't get too technical. In other words, two arches within the MACD or the slow stochastic. So this is not just an A and B, it's really an E and an F. I would say yes, except for one thing, that it's held so well. The MACD is still good. The stochastic's still at 81%. I'm going to put in A and B here, but on the B, I'm going to put a chance that it is perhaps a G/B. And that just says to me, be warned that if the dollar at this particular point on the 120-minute chart takes out the low that was made at 9:15 this morning of 100.83, there's a good chance there's a G, and you'll have a sharper decline. And that's where you could start to see something like gold start to find a little bit of traction. We'll see. Okay, and that's how we look at things. So we're about to wrap up. I want to do a couple of things just as we're going to wrap up. If you found this interesting, this whole Chapman wave methodology, and it is a methodology, then you might be interested in taking a course that will show you how to count the peaks. It'll then show you just an umpteen different things about within the really a myriad of technical tools. And let me just go to this, and I can actually give you the. We'll go to it live right here, and we're going to go to, it says simple technical tools, and we go more, and this is what you already want to be looking at. This is a three-part series, December the 6th, 6 o'clock till 7, December the 20th, 6 o'clock till 7:30 to 7:30. Each one's 1.5 hours, and January the 10th. You will get my all the information. We'll be following up. I'll be giving courses and everything, and exercises to practice on these different techniques. Check it out. I think you'll find it very interesting. Basil Chapman signing off, and I'll be back straight after this for my show, the Icon Technicians Hour. Have a great day. Have a great weekend. Tom will be back on Monday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.